Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. A turbulent Japanese political climate likely to keep the BOJ on hold today, but Governor Ueda may open the door to an October rate hike. That decision is due any moment now. Nvidia agrees to invest $5 billion in Intel to co-develop chips for PCs and data centers. The move coming less than a month after President Trump sealed a deal for a US government stake in the American chipmaker. And it might also play into Trump's call with President Xi today. That's going to be their first direct engagement in months. They're expected to try to iron out their differences around chips and also finalize the TikTok deal. Also, we're going to talk to the head of India's urban company after its shares surged on listing, marking the best debut this year on the world's second largest IPO market. Well, the Bank of Japan is widely expected to keep its benchmark interest rate unchanged at Friday's policy meeting. All 50 economists surveyed by Bloomberg say borrowing costs will stay at 0.5%. For more on this, let's get to Bloomberg, the Asia trade anchor Sherry Ahn in Tokyo. So, Sherry, Japanese economic data is looking pretty strong. We got inflation data decelerating as well, but it's still above the Bank of Japan target. And the Bank of Japan's always talking about tightening, but what's the threshold here for actually doing it?
Yeah, really what happens next is in focus, and the swap markets right now pricing in about a 30% chance that we might get that rate hike come October, and most economists expecting a rate hike also by January of next year. Of course, we'll be watching Governor Ueda's press conference for his tone on whether we get that hawkish rhetoric coming from him, given, as you mentioned, inflation data is decelerating, but at the same time, we're still above that inflation target by the Bank of Japan. Core CPI still remaining above 3% and above the BOJ 2% target for more than 3 years. But it's a political uncertainty right now that's led to some people delaying the possibility of rate hikes, especially for the likes of Sanae Takaichi, for example, jumping into the leadership race at the ruling LDP. She's seen as more pro-easy monetary policy. She wants to see more fiscal spending, so that could make the difference on what happens next to the Bank of Japan as well. At a time when we have seen more certainty over tariffs, for example, U.S. tariffs and that trade deal already struck back in July. So really the Bank of Japan not having many reasons to hold, but given the political uncertainty, when is the next hike is a key question right now.
Yeah, tell us a little bit more about that political backdrop. I mean, there is a vote coming up. What are our expectations around who the next Prime Minister is going to be and what that's going to mean for fiscal policy?
The vote is coming up on October 4th and campaigning starts next week. Sanae Takaichi, pro-easy money, is one of the lead contenders. We also have Agriculture Minister Shinjiro Koizumi jumping into the race. He's, though, seen as more supportive of rate hikes. Kyodo poll, a recent poll now showing that the approval rating for Takaichi is about 28%, about 23% for Koizumi. And we also have the top government spokesperson, Hayashi, who wants to focus on real wage growth being sustainable at around 1% also in this leadership race. We have seen the surprise victory of Ishiba last year, so anything goes during this leadership election as well. And of course, that will have implications for fiscal spending and what happens to Bank of Japan policy as well.
Well, if we take a look at some of Japan's assets, the stock market's still hovering around record highs. We've got two-year JGB yields at the highest since 2008. Where to from here?
Yeah, we have seen JGB yields continue to rise. The 10-year yield is also near this year's highs of around 165. The 2-year yield, you mentioned at that 2008 high as well, especially with the inflation data this morning, sending yields higher and also tracking treasuries lower as well for JGBs. But at the same time, we have seen the stock market, that rotation out of bank stocks, especially after Prime Minister Ishiba's resignation, on the expectation that perhaps we could see those rate hikes being delayed. And and a lot of that money going into real estate, which is, of course, heavily dependent on debt. Some saying that that move might be perhaps ahead of itself, given that Shinjiro Koizumi could also become the next prime minister, depending on how the leadership race goes. But we're watching the Japanese yen right now trading sideways as well, given that we have seen the Fed cut rates and also the dot plot implying 2 more rate cuts. If the Fed continues to cut rates and the BOJ continues to hike, could we see a reversal on the yen weakness that so far has cushioned the Japanese economy, given higher U.S. tariffs? That could be another variable for the BOJ to keep in mind.
All right, that's Bloomberg, the Asia trader anchor Sherry Anda in Tokyo, and we'll get Sherry back when the decision drops, the decision from the BOJ imminent. Well, shares of Intel rallied hard after Nvidia agreed to invest $5 billion in the chip maker. That was a surprise move. It's going to see the two firms co-develop chips for PCs and data centers. Now, this comes less than a month after the US government agreed to take a roughly 10% stake in Intel, which counts China as its biggest market. That announcement also came just ahead of Friday's call between President Trump and China's leader Xi Jinping. That's going to be their first direct engagement since June between the two leaders, and US export controls on chips and the TikTok deal going to be key topics.
So what we're doing, and we're speaking to President Xi on Friday to see if we can finalize something on TikTok, because there is tremendous value, and I hate to give away value. And we're doing it in conjunction with China. But we are getting, the United States is getting a tremendous fee plus, I call it a fee plus, for just making the deal. And I don't want to throw that out the window. We're pretty close to a deal. We may do an extension with China, but it's an extension based on the same terms that we have right now, which are pretty good terms.
All right, let's get to our chief North Asia correspondent, Stephen Engel. So, Steve, the TikTok algorithm chips, they're going to feature heavily in these talks. What are our expectations?
Yeah, that's right. So there's a long list of contentious issues, obviously, between China and the United States. One, of course, is that trade truce, and that deadline coming up, the most recent truce, will expire November 10th. So already Donald Trump sort of telegraphing there that they could be willing, if the terms are the same, essentially, over the last 90 days, they could extend that again. But that's why, in many ways, TikTok has moved up to the top of the agenda for the talks that are going to be happening over the phone or video conference in about 10 hours from now, 9 a.m. East Coast time in the United States Friday, which is 9 p.m. Hong Kong time. And TikTok could be sort of a deliverable for both of these leaders. We simply don't know what cards China's holding right now in those negotiations. And Donald Trump hasn't really revealed the issues that could potentially cause the snag. In particular, the algorithms. Who's going to control them? Who's going to own them? Is this going to be a licensing agreement? We know that a U.S. consortium led by Oracle and others, Silver Lake Management and Andreessen Horowitz, essentially have agreed to buy the U.S. assets that Trump says could be worth tens of billions of dollars. You just heard him say that's a lot of value, not worth throwing out the window. But again, there's a lot of details about what's going to happen, who's going to own the data, who's going to own the algorithms. Do they need a new algorithm for the United States? So a lot of questions still to be answered. We'll have to see what tone is set during that phone call.
Yeah, a lot of discussions around TikTok, and they appear to be encouraging as well. But to what degree does this, in a way, obscure the fact that the US and China have still got some pretty large differences over the overall relationship?
Yeah, well, both leaders are going to want to find for their domestic audiences deliverables. And they're also kind of, working the levers right now. So you did see on the eve of this phone call, China basically scrapping an investigation that they had launched into Google's Android prevalence in China. It was more of a symbolic move to scrap that investigation because it started after Liberation Day and after all the talk of the tariffs. And let's face it, Google really doesn't have a meaningful presence in mainland China. So scrapping that is probably a goodwill gesture, get the tone right, and it's an easy gift for China. Also, we're hearing from Chinese customs officials that rare earth material exports including those much-needed batteries, or magnets, hit record levels in August. So those exports are happening, much to the urging of the United States. One key contentious issue, among others, is soybeans. Soybeans, already we've started the key marketing season. The harvest in America has already begun, September 1st. And data from the U.S. indicates China has not ordered any soybeans yet in the first couple of weeks of the key marketing season. Last year, yes, China started diversifying its order book from places like Brazil. They have found, like those magnets, soybeans could be a very key lever because the American farmers sold half their crops to China last year. And so far, they've not sold any, and the harvest has already begun.
All right, Chief North Asia correspondent Stephen Engel there. Well, meanwhile, China's push for domestic AI chips has sparked a rally in related stocks that's added $240 billion in value since late August. Tech giants from Alibaba to Baidu and even lesser-known names such as Cambricon have been touting new advances on the AI front. Well, let's get a few more insights on this from Laila, Khawaja, Research Director at financial services company Gavekal. Laila, thanks so much for joining us today. And I just want to start with the prospect of this phone call between President Trump and Xi Jinping, the first since June that they've discussed. So can you tell us a little bit about how you view the political environment around the AI chip story at the moment? And do you see things maybe becoming a little bit more settled after that phone call?
Sure. I think I just want to have a quick comment on the TikTok deal because with any sort of trade talk, I think it's important to see what each side has said about the situation, especially given, the rare earth misunderstanding right after the Geneva talks, right? So if you look at the U.S. readout, it's mainly like the consensus is reached on the TikTok deal alone. But then if you actually go ahead and read the Chinese side of the readout, it seems like the consensus, this framework consensus is reached at a much broader level. So the Chinese readout specifically mentioned that, both sides agreed to resolve the issue of TikTok through cooperation, reduce investment barriers, and also promote economic and trade ties. So I think the key phrase here is reducing investment barriers. To me, I think, it's highly unlikely that Beijing has come to the table with the TikTok deal without securing some sort of anticipated concessions from the U.S. because TikTok is way more important to the U.S., to Trump, than it is to Beijing. So if I would have to take a wild guess, I'm thinking that maybe allowing Chinese investments in the U.S. might be back on the table, which will be a big win for China.
And what about potential for cooperation or otherwise on AI chip development? Because China's made it pretty clear that they're not interested in the Nvidia RTX Pro 6000D. Bit of a mouthful there, but that's the chip that's Nvidia's specifically designed for China. What's the message here? Is it become a political football, or is China's chip industry accelerating at a pace that they just don't want or need it anymore?
Sure. I think there has been a lot of noise about the Nvidia chips. And then my general takeaway is that, yes, Chinese chips are progressing to some extent. So it's kind of closing the gap, right, to Nvidia's less advanced chips. But then there's still a significant gap between the Chinese chips to Nvidia's advanced offerings. So if, you read a story about the China Nvidia chip ban closely, China did not ban all Nvidia's chips. China specifically banned a chip called B40. And B40 is even dumber version than the H20, which is already dumbed down like multiple rounds from the previous export controls. So to me, the message is that, we don't want to spend our money to buy your inferior chips. If you do want to market in China, you better go, lobby President Trump and then sell us better chips. So I think all these antitrust probe, the H20, saying no, and also the most recent saying no to the B40, is China trying to ramp up pressure to Jensen Huang to lobby for better chips. And then China sees and knows that Jensen Huang has lobbying power.
How correct do you think that assumption is, though? If you were Jensen Huang, would you realistically be approaching President Trump and saying, hey, I want to export higher bandwidth chips, better chips to China? I don't imagine that's going to get a very positive reception.
Right. I mean, the point is, China is diligently, right, subsidizing the sector, like really, working very hard on closing the gap. So it's not like if you don't sell the chip, then China just, won't catch up anymore. So I would say, his Jensen Huang's his point about the diffusion, like I think that really makes sense because if you really get the Chinese companies, and engineers hooked on Nvidia systems, they're less. It's going to slow them down into switching to the domestic ecosystem. And then if you talk to anybody actually on the ground in China, they will tell you the same thing that, they mainly purchase the domestic chips because of political pressure or because they have to, because they're state-owned enterprises of the local governments, not because they want to, because Nvidia still is just a much better chip to use.
How much smuggling of Nvidia chips do you think is going on at the moment into China?
I think more than Washington thinks. I think there's significant, smuggling going on in China ever since the first round of export controls from several years ago. And then that's, again, I feel like there's a pretty big disconnect between, what's happening on the ground in China versus what's kind of known here, because you have very little visibility into how stuff operates in China, right? But then if you actually go to the ground in China, you will see that Nvidia chips is really pretty readily available everywhere. And then, I would say there's very sophisticated supply chain organized around the smuggling part.
You were talking a moment ago about how advanced or otherwise China's chips are versus the US counterpart. Can you describe for us just how big that gap is and perhaps explain to us how quickly China could potentially catch up? Do you anticipate any more DeepSeek style moments?
Sure. I think gap is being narrowed in certain lower end chips. For instance, some chips that you can use in the inference. But then the gap to the really advanced chips is really large because China really faces two major bottlenecks, right? So the first one is high bandwidth memory, which is, very high end, even though there's, again, some noises about some Chinese companies making big progress, still the gap is there. So China lacks that. And then right now it's kind of relying on stockpiles and also smuggling from Korea to kind of, meet the demand. So that's the HBM. And then the other side is really the advanced manufacturing capabilities. So we have the news reporting coming out saying that, China's trying to triple its 7 nanometer sort of capacity in the upcoming year or two. But then the reality is that, China's really still relying on gray channel or secondhand equipment, foreign equipment, to actually trying to manufacture those chips. And then my speculation would be that the yield is still very low and that the capacity is probably still very constrained. So that directly impacts how much domestic AI chips you can actually put out, because Washington back in November, cut off Chinese AI chips access to TSMC. So they would have to rely on these domestic capabilities, and that's very limited.
I just wonder if you can talk to us a little about the investing climate around this as well, because, of course, as the famous saying goes, in a gold rush, you want to be selling picks and shovels, and that's what chip makers are in the AI context, obviously. But when you're looking at the price of picks and shovels right now, are some of these names looking a little bit overvalued?
You mean China?
Yes.
Yes, I think they're very overvalued, but then I think, the sentiment is really high, right? Because the government is kind of, backing it. The government's kind of drumming this up, right? So, the reality is that all these chip companies, if they can really make actual progress, then you're talking about replacing the whole Nvidia market share in upcoming years. So the potential will be really, really huge. But then there's definitely a big disconnect right now. But then still the government is kind of drumming up in the media about their progress and also showing off their order numbers because it has to keep the investors, interested and excited about this future, right? You can't just count on the government to keep subsidizing, and have the local governments and the state-owned enterprises purchasing the chips. You're going to get the market excited so they can keep investing in these companies so they can continue making the progress because this requires really hefty investments.
Yeah, well, considering this whole sector has the blessing of the Chinese government, does that mean the risk of a correction is fairly low? Is it a good time to buy?
Well, I think Beijing, right after Cambricon kind of, rallied like so much, the government was kind of concerned about, this bubble. So I would say that they are way overvalued, and I definitely wouldn't go in on those heavily overvalued stocks at this point. I mean, there's going to be a correction coming, I would say, and then maybe it's a good time to buy at that time. But right now, the valuation is way too high. It's way overvalued.
All right, Laila Khawaja, we'll have to leave it there, but thanks so much for your analysis today. Laila Khawaja is Research Director at Gavekal. Still to come this hour, we're going to speak exclusively with Indian rent-a-service marketplace Urban Company as its strong trading debut in Mumbai this week boosts optimism for upcoming listings. This is Bloomberg. Welcome back. You're watching Insight. Here are some of the stories we're following. President Trump says U.S. broadcast networks should face license scrutiny if they're too critical of him. Trump had earlier praised ABC's suspension of Jimmy Kimmel over comments about conservative activist Charlie Kirk and also filed a $15 billion lawsuit against the New York Times. The incidents have spurred worries among Trump critics about free speech in the U.S. The US has vetoed a UN Security Council resolution demanding an immediate ceasefire in Gaza that was backed by all other members of the body. This is the sixth time the US has vetoed a Gaza resolution since 2023 and underlines American and Israeli isolation over the war. US Councillor Morgan Ortega says the resolution failed to adequately condemn Hamas. President Trump is asking the U.S. Supreme Court to allow him to dismiss Fed Governor Lisa Cook while she challenges his attempt to remove her. The Justice Department has requested a halt on a federal court ruling that allowed Cook to remain in her position. Her lawyers have warned that even a temporary disruption to the status quo could impact the U.S. financial system. The Bank of England has kept interest rates unchanged at 4% and cast doubts over the prospect of more cuts later this year. Policymakers say future cuts will be gradual and careful, citing concerns over a resurgence in inflation. Traders do not expect any further easing this year and are only fully pricing in one more quarter-point reduction by the end of 2026.
So I think the sensible thing is that we've been on hold today. We'll see how the news unfolds in the period to come. I mean, I continue to think that there will be some further reductions, but I think the timing and scale of those is more uncertain now.
Coming up, President Trump says Vladimir Putin has let him down as he stands by his demands for allies to stop buying Russian oil. We're going to drill down into the implications for oil markets next. This is Bloomberg.
He's let me down. He's really let me down. War is a different thing. Things happen that are very opposite of what you thought. You thought you were going to have an easy time or a hard time, and it turns out to be the reverse.
President Trump speaking about Vladimir Putin and his refusal to end the war in Ukraine. Even so, Trump is still insisting that allies must stop purchasing oil from Russia if they want the US to take greater steps to pressure Putin to end the war. Now, for more on this, let's get to our news desk editor, Balazs Pens. Also with us, Stephen Stapczynski, who leads our Asian energy coverage. So, Balazs, let's start with you. Do President Trump's latest comments change any of the calculus around ending the war in Ukraine?
Well, Paul, it's clear that the president is frustrated. The summit in Anchorage was over a month ago, and not a lot has happened since then in terms of his push for some peace talks between Putin and Zelensky. So he is sort of showing more of a willingness to put harsher sanctions on Russia, which is something that Ukraine and its European allies have pushed for a long time. One way to look at it is that the president is putting a clear benchmark on those sanctions and showing the allies where they need to get to for him to impose those sanctions. Of course, another way to look at it is something that we can get into a little bit more is whether those benchmarks are even achievable given the reliance of some of the European NATO members on Russian oil. So that's the calculation that's happening right now in that area.
Yeah, let's talk about that a little bit more. Who is buying Russian oil and why, and how is it holding back the sanctions plan?
Yeah, there are a few European countries like Hungary, Slovakia, and other NATO countries like Turkey who are very reliant on Russian oil. Hungary and Slovakia particularly have been buying Russian oil through this pipeline that dates back to Soviet times, and they have been very reluctant to give up that source of cheap energy, and they have achieved some carve-outs within the European context, even as the EU as a whole has really reduced its reliance on Russian oil. So the question is whether the broader European community will be able to pressure these countries to move their stance a little bit, or whether they will continue to try to look for that special treatment.
Stephen, I want to bring you in now as well. Are we seeing any reaction to any of this on the oil markets?
You know, I think for today we saw a small dip, with Trump saying that he thinks that lower oil prices is a way to pressure Putin. But it's been pretty modest. I think Brent is down just about 0.1 to 0.2%. Speaking more broadly, though, I think you have seen a larger impact on other statements that he's made. Any time that he talks about potentially hitting buyers of Russian oil or anything that could affect the amount of Russian oil on the market, if he were to curb that, that would increase prices. Now, as we just went over, we're sort of at a standstill with the situation. If Trump wants Europe to stop buying oil, if he wants the EU and NATO in general to stop buying oil, that's going to be a really tough hill to climb. So it's very unlikely we're going to see any more sanctions or tariffs on Russia or China or India, which are major buyers of Russian oil, until there's some sort of agreement or there's some sort of path forward with the European Union and NATO. But at this moment, it's pretty unclear.
Is there a role perhaps for some other OPEC countries, perhaps Saudi Arabia, to add supply, drive down the price? But then again, I guess Saudi is an OPEC Plus member along with Russia as well as a US ally. So the geopolitics are something of a complex web here, right?
There is a bit of a web, but you hit a really interesting point, which is Saudi Arabia has been willing to add more barrels on the market. They've increased their production hike. They brought back production cuts faster than expected over much of this year. They're doing it for next month as well. There is a way, it's not uncommon for Saudi Arabia to play into Trump's hand. Yes, of course, lower prices doesn't help their budget, it doesn't help them. But at the same time, there is this view by analysts that they are trying to capture more market share away from U.S. drillers. So they could potentially hit two birds with one stone if they're able to get the broader OPEC and OPEC Plus apparatus to agree to supply hikes, more supply being added into the market from October onward. Of course, that would potentially put pressure on prices. That would make Trump happy and would also get them maybe some more market share. Now, also with the you're not exactly sure what's going to happen with Russian flows. You're not really sure what the European Union is going to do. Yes, there are issues surrounding Hungary and others about buying Russian oil, but there are talks by Poland and other countries as well to be more aggressive in reducing purchases of Russian crude as well as Russian gas. So with all of that in context, Saudi Arabia might look at this as an opportunity to add more barrels into the market, capture market share, and also maybe win some brownie points with the Trump administration.
All right, Stephen Stapczynski there in Singapore, also Balaz Pans in Hong Kong joining us there. Let's take a look at how Indian assets are tracking ahead of the open at the moment. And we've got a couple of important debt auctions coming up as well. India to sell 300 billion rupees of 2035 bonds and about 60 billion rupees in 2028 bonds as well. So bond traders keeping a close watch on that weekly debt auction. 4.1 billion in total, that's dollars, to gauge some demand for that paper. Nifty 50 futures, meanwhile, looking pretty flat at the moment, and the rupee still fairly weak. Now, we're also going to keep an eye on Adani stocks after India's securities market regulator cleared the group and its billionaire founder, Gautam Adani, of some of the allegations raised in 2023 by the US short seller Hindenburg Research. Now, that scathing report alleged large-scale corporate fraud and stock price manipulation, triggering a stock rout that at one point eroded more than $150 billion in market value for listed Adani entities. Now, the stocks have since staged a mixed recovery since 2023. For more on this, let's get to Chiranjeevi Chakraborty, who leads our Asia equities coverage in Mumbai. So, CJ, thanks so much for joining us. As we said there, the regulators cleared Adani of some of the allegations, but not all. So can you tell us some of the details here? What's left?
So, yeah, Paul. Clearly, at this point of time, the regulators said that some of the related party, transaction that Hindenburg had alleged were dubious or, did not meet the regulators' disclosure norms. Those allegations have been rejected by SEBI at this point of time. Let's remind everyone that there were multiple aspects of Adani Group and, of course, its billionaire founder Gautam Adani that the Indian securities regulator was examining or investigating. And at this point of time, the two orders that came, on Thursday evening here in India, they looked to be clearing, Gautam Adani as well as certain, companies involved in his group of violating any disclosure norms or related party transaction norms of the SEBI.
So what's going to happen next? Is there going to be any further investigation or action from the regulator?
Yeah, I think that is the $64 million question right now. We know that the SEBI had told India's apex court a few years ago that they had finished investigation in 22 out of the 24 aspects that they were probing the Adani Group and its founder. And at this point of time, we are still awaiting, action or answers or orders on many of those probes, which relate to, from everything to stock price manipulation that was alleged by Hindenburg to, foreign entities routing funds into the Adani Group stocks. So there is still a lot more action that will come forth in the coming, months and years from the SEBI's front.
Yeah, well, as you're speaking there, we're looking at some of the charts for some of those Adani corporations. And, as we mentioned at the start, not all of them have recovered back to where they were when this Hindenburg report first came out. So what is the outlook for Adani shares and what are analysts saying?
Yeah, I think at this point of time, clearly the risk from the regulatory point of view has reduced quite considerably compared to, back in 2023, when the entire world's attention was on Adani Group following Hindenburg's bombshell short seller report. That said, the founder is still facing certain probes in the US in relation to alleged bribery scheme. We know we had reported about that last year, and that has sort of continues to be in the balance for the group. Besides that, when it comes to the fundamentals of the group, the earnings trajectory has improved quite a bit. Adani has refocused the entire group to sort of invest in India's infrastructure projects that it really believes in and expects to benefit from. They have committed more than $100 billion on that front, and it clearly shows that, even though the stock price has not gone back to the glory days prior to the short seller report, there is still incremental optimism building up for at least certain entities of the group, if not all.
Also, CJ, we're just seeing some of these Adani shares moving in the pre-market. Adani Power particularly up 7.1%,
Yeah.
But a lot of those Adani companies are all in positive territory at the moment. What sort of movement do we anticipate when we do get going? And will those moves be sustained?
Yeah, I mean, at this point of time, it does look, I mean, you can see on your screen Adani Power, which was one of the entities named in, SEBI's order on Thursday evening, clearly seeing a bit of a sentimental uptick there. And it is very likely that from a sentiment perspective, I think investors will see this as one more, box ticked in terms of reducing regulatory risk for the group, as well as for certain companies in the group. And I believe that these gains, when the market does open in a couple of minutes, will sustain and probably even, extend higher.
All right, Bloomberg Asia Equities team leader Chiranjeevi Chakraborty there in Mumbai. Still to come, Urban Company is India's top performing IPO this year. It jumped more than 60% since its debut on Wednesday. And we're going to speak exclusively with their CEO up next. This is Bloomberg. Just want to update you what's happening with the Bank of Japan. The answer is actually nothing, which is kind of interesting because normally we'd expect to have a decision by now. All the 50 economists surveyed don't think we're going to have a change, but we've got a yen strengthening at the moment, 147.74. For more on this delay, let's get to Bloomberg, the Asia Trade anchor, Sherry An, who is in Tokyo. So, Sherry, we'd expect to have a decision by now. Does this delay mean nothing or everything?
That's the million-dollar question right now, especially as JGB traders very much focused as well, because we're seeing yields now spike higher on expectations that perhaps this delay could actually mean a change in policy. And already the 2-year yield was at a 2008 high, given that we got inflation figures earlier this morning showing that core CPI, stripping fresh food and also energy prices, were still topping 3%. Remember, core CPI has been above the BOJ's 2% target now for more than 3 years. So what does this delay mean is a key question. Last time the BOJ raised rates was back in January, and at that time the delay was also in place. 12:05 is around the time local here in Japan when you get all economists agreeing that there's no move. We're past that. We're past the 12:40 mark as well, which is when you're actually seeing a policy change. So you can see the market's a little bit jittery at the moment. We were also watching for potentially any details on Japan's ETF holdings. We had seen reporting that the BOJ might come out with a strategy on how to unload more than $250 billion of those ETF holdings. So big question right now, where do we go from here? But so far, I'm not seeing any headlines coming from the Bank of Japan.
All right, Bloomberg, the Asia Trade anchor, Sherry An there in Tokyo. And we will get back to Sherry when that decision does finally drop. But it is interesting that we have got a lengthy delay on our hands here. OK, let's take a look at shares of Urban Company. This is India's top performing IPO this year. Got more than a 60% gain since its Wednesday trading debut. Now, the rent-a-service marketplace operator's success is raising optimism for other upcoming listings from Indian startups, including eyewear retailer Lenskart Solutions and online seller Meesho. Well, joining us exclusively now is the Urban Company's co-founder and CEO, Abhiraj Sing Bhal. Abhiraj, I just want to start by offering you a moment to congratulate yourself. I imagine you're fairly pleased after the events of Wednesday.
Thank you so much, Paul. Thank you for having me, and thank you for your wishes. It's been a very, very grateful day for us. We're also humbled by the reception that we've received. And we recognize that this is a trust that investors are placing in us for a promise of the future that we have to deliver.
Abhiraj, I just want to break in briefly there. We're just getting some breaking news from Japan that we have been waiting for. The Bank of Japan keeping that overnight call rate at 0.5%. So no change to rates as we expected in Japan. Two members, though, dissenting holding rates for the first time under Governor Ueda's watch. So we'll get you a little bit more on that decision in a little while. But I want to get back to Abhiraj Sing Bhal of the urban companies. So you've got through the IPO process. You've raised some funds. Can you talk to us about your plans about how you're going to put that capital to work?
Paul, we've identified 3 or 4 areas of investments for the IPO proceeds. The most important is technology. We are a technology-driven services platform, and we invest heavily in technology, not just the apps from which customers book and service professionals deliver these orders, but the entire back-end technology that goes into quality control, matchmaking, and we're extensively using AI today for better quality control and matchmaking. So that's one big area. We also run and manage internally a very, very large footprint of training centers. We train every single professional who joins our platform, both in soft skills and technical skills. This will be a very major area of investment for us. We want to expand our training footprint. We want to onboard more full-time trainers and continue to invest in training for our service professionals. And we will also build our internal team, brand building to acquire more users, extend our footprint to many more cities in India. The market opportunity is huge, Paul. Less than 1% is organized and online. So in many ways, we think we're just getting started, and we need to make these investments to continue to grow and to continue to compound at a healthy clip.
Yeah, in terms of expansion plans, we've seen other consumer technology firms start off in one particular area, say perhaps food delivery, and then expand into others. Could you see yourself perhaps following a similar trajectory, broadening the base of the business, or perhaps expanding into other countries as well?
I think, Paul, at this point in time, we want to be sharply focused on the home services and solutions space. We think there's a massive opportunity within home services and solutions, and there's a lot for us to do. We are only present in 47 cities in India, and only in a handful of service categories. The number of service categories that can be delivered in your home, can be much more than what we offer today. And the number of cities that we could be present in could be much more than we are today. So I think we have our hands full with this opportunity, and we want to be very, very laser sharp focused. We will look at adjacencies around products and solutions, but all within the home.
Can you talk to us a little bit as well about your forecast for revenue and profit growth over the next 3 years or so?
Paul, if I talk about the last 3 financial years, we've actually grown quite well. We have almost more than doubled our revenue, going from roughly about $70 million to about $130 million. And in that process, we have also turned the corner as far as profitability is concerned. I think for the next 3 years, our goal will be to continue to compound at a healthy clip, continue to invest in growth, and continue to see an improvement over time in our profitability and our margins without compromising on long-term growth.
Also, I wondered if you could tell us a little bit about how you would characterize consumer demand in India at the moment, and how do you see consumption evolving, and what sort of assistance have recent tax cuts provided you?
I think consumer demand on the whole, particularly in urban cities, is holding up well. We've had fairly large announcements earlier this year on the direct income tax cut, particularly for lower middle income and middle income households. And then we've had a very, very holistic indirect tax cut right now. So a lot of money is going back into the pocket of households, and this will find its way into discretionary consumption where we operate. Services at home, whether beauty or cleaning or other home services, are finally in the discretionary basket. And when consumers have more discretionary income to spend, we do see an uptake in services like ours.
Okay, Abhiraj Sing Bhal, co-founder and CEO at Urban Company, which had an impressive IPO on Wednesday. Thanks so much for your time. Right, let's take you back to Japan now. The Bank of Japan decision, they were on hold. That delay made us think maybe something was cooking, but no change to the cash rate in Japan, 0.5% as it stood before this decision. But a little bit of guidance on inflation. Bank of Japan says inflation expectations have risen moderately. Let's get back to Sherry Ahn Yuan in Tokyo. Sherry, a couple of dissents there as well. What were some of the key takeaways from this decision?
Yeah, the vote was 7-2 to keep the rate steady at 0.5%, coming from the likes of BOJ hawks like Tamura and also Takata, who voted against the decision. But as you said, the Bank of Japan also very much focused on trade policies and the overseas economy, according to the Bank of Japan. What's interesting in this decision, which of course was pretty much delayed, was the plan of a wind down of their ETF holdings. The Bank of Japan currently holds more than $250 billion of ETFs. And now we have a plan in place that they will be selling about 330 billion yen of ETFs per year, 5 billion yen of J-REITs per year at a pace of 620 billion yen by market value per year. And remember, the Bank of Japan doesn't want to destabilize the market. It's a huge player on the stock markets, on the JGB markets, of course, as well, given its decades of quantitative easing. So now they're trying to unload these ETF holdings, normalize policy, but they're saying that they want to avoid inducing destabilizing effects and incurring losses as much as possible when unloading ETFs. They're also saying that they remain flexible on the pace depending on how these sales go.
We're just seeing some of the assets reacting. The Nikkei holding on to gains. We've got the 10-year bond yield rising 4 basis points, a little bit of strength for the yen as well. Just wondering about beyond that ETF progress, was there any other commentary, Sherry, particularly around inflation?
The BOJ continues to say that uncertainty remains high over the global economy. Uncertainty was also how the BOJ characterized the trade environment at the moment, given that the last decision came before the July trade deal between Japan and the United States and that lowering of tariffs to mostly 15% on all Japanese goods. But it was pretty much expected that they would hold. All 50 economists surveyed by Bloomberg expected the rate to be kept at 0.5%. And we're seeing those yields continuing to rise. Remember, we had the 10-year yield spiking earlier today because we were expecting potentially a big policy change coming from the Bank of Japan, given its delayed policy decision. But at the same time, just really reacting to treasuries which traded lower in the overnight session and inflation numbers that also came in pretty strong early today.
All right, Bloomberg, the Asia trade anchor, Sherry Ahn there in Tokyo with that Bank of Japan decision, no change as anticipated. Before we go, let's take a look at our guest lineup for next week. We're going to be at the JP Morgan India conference on Monday for an exclusive interview with the firm's global head of advisory and M&A, Anu Iyengar. Plus, PIMCO's Kim Stafford is going to join us to talk markets as well. But that is it for Insights. Horizons Middle East and Africa are up next. This is Bloomberg.